Hey, what's up, everybody? Today, we're going to be talking to those of you who owe taxes to the federal government and you can't pay them. You don't have the money, and you simply say, hey, what am I going to do if I can't pay my taxes? What do I do? First of all, I want you to know you're not alone. There's about 14 to 15 million Americans who are currently in collections with the IRS. This means that they have a federal tax balance that they have not paid, and the IRS is trying to collect that from them. The IRS has also identified another 7 million non-filer taxpayers. What does that mean? That means they have identified about 7 million people who should have filed a tax return but failed to do so. Typically, the people who fail to file their tax return owe taxes, and that's one reason why they've decided not to file the tax return, hoping that if they don't file it, they won't trigger the IRS, and they can kind of slip under the radar for a little while until they can pay it, or maybe they're even hoping they kind of get away with it. I don't know. But you're not going to. Tax problems do not simply go away. You can't ignore them and hope that they will resolve themselves, because they won't. So that equates to maybe up to 22 million Americans who have a tax problem with the IRS. That's approximately 1 out of every 10 American adults. So this is not a problem that is unique, unfortunately, and so you're not alone. The next thing I want to tell you is don't panic. There is a way forward, and we're going to go through that right now. But don't panic. Number one, what do you need to do if you have a tax balance that you can't pay? You need to file your tax return. File your tax return. File your tax return, please. No exceptions, no questions asked. File the tax return. Why is that? Well, there's multiple penalties that the IRS can assess. Now, the IRS will assess failure to pay penalties, absolutely. So if you file your tax return and you can't pay the balance due, there will be a failure to pay penalty. There will also be interest. So that kind of feels like the same thing twice, but it is different. There's interest on the taxes owed, and then there's also a failure to pay penalty. Now, those are going to be assessed no matter what. What you're trying to avoid by filing your tax return is the failure to file penalty. There is a penalty simply for failing to file a tax return by the due date or extended due date if you apply for an extension timing. The failure to file penalty is 5% per month. Now, typically when you talk interest rates, you're talking percentage per year. This is 5% of the taxes owed per month. So what does that mean? If you do your tax return, it comes out and says, all right, you owe $10,000, and you say, I cannot pay $10,000. I'm not going to file my tax return. Hopefully this will keep the IRS from finding out about this, and I can kind of get my act together. You fail to file a tax return, 5% of $10,000 per month, up to a maximum of 25%. That is going to be $2,500 added to the $10,000. So now you're $12,500 within 6 months. Just 6 months of failing to file your tax return, and you've added $2,500 to the $10,000 that you owe the IRS. Now, the failure to pay penalty is going to be in conjunction with that. It's 5% per month as well, up to a maximum of 25%. But they don't charge them at the same time. So for the first 5.5 months, they're going to charge you 4.5% interest for failure to file until it maxes out at $2,500. They're going to charge you 0.5% interest for failure to pay until the failure to file penalty drops off. Then the failure to pay penalty will kick up to 5%. They'll charge you that for a maximum of 25%. And so we're looking close to 50% in penalties within a year. So $10,000 goes to $15,000 pretty quickly within a year. And that does not include the interest that they're also assessing. I think right now it's about 0.5% a month, so 6% per year. I think it's roughly another $600 per year that they're going to tack onto this as well. Now, that interest is also going to be charged not only the taxes owed, but your penalties that you're racking up too. They're going to be charging interest on those as well. So this can get out of hand very quickly. You can save $2,500 simply by filing your tax return. Please file your tax return. Number two, if you owe taxes for a prior year, or you have this balance that's racking up, or you are filing your tax return for the current year, but you haven't in a couple years, you need to be in compliance. That's the next step. You have to be in compliance if you're trying to resolve a tax debt. If you're not in compliance, some of your options are taken off the table. They're not even available to you because the IRS says you're not in compliance. We're not going to give you that option for resolving your tax debt. What is defined as compliance by the Internal Revenue Manuals put out by the IRS? Compliance is filing your past tax returns. So if you've missed a couple years of tax returns, we need to go back and file those. How many? Do we need to go back if you haven't filed for 10 years? Well, compliance is defined as the previous 6 years. So we definitely need to go back and file any missing tax returns within the previous 6 years. Now, the IRS can file a substitute for return, an SFR, on your behalf. If they've done that, technically you filed for that year. Now, a lot of times they leave out some things that would be beneficial to you, so it could be beneficial to go back and file an original return, even though the IRS has done a substitute for return. But we need to have filed the previous 6-year tax returns. We don't have to have paid the tax on those, again, because the whole problem here is we have a tax debt, but we have to have filed them. Now, the second part of compliance is your current tax year. So let's say you come in and it is July of 2020 and you have some tax debt. Maybe it's from 2019 or maybe it's from 2012, who knows? But you have money that you owe to the federal government, the IRS is trying to collect. And it is July of 2020. Compliance means previous 6 years tax returns have been filed, and it also means that you're current on your tax payments for 2020. So I know you don't have a 2020 problem yet because that return's not going to be due until 2021, but you have to be current. So that means if you're self-employed or for any other reason you owe estimated tax payments, that means you have to be making your 2020 estimated tax payments. It's July, your first quarter due April 15th, your second quarter due due in June. Those first 2 estimated tax payments have to have been made or you're not in compliance. If you're a typical W-2 employee, it means that you have to have enough withholding from your paycheck to cover your estimated taxes for 2020. So it's a little bit easier to do that than sometimes the estimated tax payments. But this is what compliance means, up to date on your current year tax payments. You have to do that. So compliance, that's your next step after making sure you file the tax returns to stop those failure to file penalties. Now, what's the next step? The next step is you need to evaluate your ability to pay. Now, I know you've already done this because you've come in and said, I can't pay. I know my ability to pay. I can't do it. I don't have $10,000 in the bank. I can't pay. That's not the IRS's definition of ability to pay. They have a formula for ability to pay. It's basically your gross revenue minus allowable expenses. What's left over at the end of the month is your ability to pay on a monthly basis. And then whether or not you can pay the full taxes owed, you have to multiply that monthly payment left over by the total number of years the IRS has left to collect. Now, typically they have 10 years to collect. Sometimes that can be delayed and stalled or told, and they can get more time than the 10 years because some things pause the clock on that. But typically it's 10 years from the date the tax is assessed, which is when the tax return is filed. And so that's what your ability to pay is. They're going to calculate that. Now, we need to sit down and calculate this ability to pay. So you take your gross revenue, W-2 employee, this is your gross amount. It's not the amount after your withholdings. It's the gross pay, your gross salary. They're going to subtract off what I mentioned was allowable expenses. They're going to disallow some expenses. There are some things like your timeshare, that you pay $300 a month for. They're not going to allow that. That is not an allowable expense. There are some other unallowable expenses that you simply can't calculate. So even though you say you can't pay, the IRS might come to a point where they calculate that you can pay. There are things like food as well, food and clothing, where you might be spending $2,000 a month, but the IRS is going to limit you to a national or regional average for that type of expense. So maybe you're spending $2,000, but for your family size, they're going to limit you to only $1,100. So it's very possible that you don't have any money left over at the end of the month, but the IRS is going to come out with a number that says you should have, and we deem you to have $500 left over at the end of the month. So you can pay us $500 a month on a payment plan. Or if you're trying to do an offer in compromise, you take that $500, you multiply it times the number of months left over the period of time that they have to collect, and that's how much they deem you can pay. If they think that you can full pay, you cannot do an offer in compromise. If they take that number, say that again, if they take that number after we do the allowable expenses deducted from your income, they multiply it over the amount of time that they have left to collect the tax, and it results in full payment of the taxes owed, you cannot do an offer in compromise. And we haven't talked about an offer yet, but we will in just a second. So once you've identified what your ability to pay is, that's going to determine what options are available for us. There's installment plans. Now, there's different types of installment plans. There are short-term installment plans, there's a long-term installment plan, there's a one lump sum, just pay it, that's not an installment plan, but there's just the option to, of course, pay your tax that you owe in one lump sum. And then there's also partial pay payment plans, where when you look at the amount of tax owed, you look at the amount of money left after you do your allowable expenses, and you can't pay the full amount, but you're going to pay partial pay. So you owe $10,000, you're going to pay $8,000 over the amount of time left. That's partial pay. You have to do a pretty involved application for that, and the IRS has to accept it. Now, there are streamlined payment plans as well. If you owe less than a certain amount of taxes, I think right now it's $50,000, and you can full pay it over what I think right now is 72 months, then you can do a streamlined payment plan. Basically, you set it up, you say this is how much I'm going to pay, and as long as you owe less than $50,000, you're going to pay the full tax over 72 months. You can do it on the computer, you can do it online, it's accepted immediately, you can set up a direct debit, you can get on a payment plan. Now, this will not stop the penalties for failure to pay if they're still going. Now remember, they max out 25% of the taxes owed, so they will stop at some point. It's also not going to stop the interest. They're going to continue to tack on interest, just like you would with your credit card or your mortgage or whatever else, any other kind of loan you have. It's going to have interest on it every month, and you're going to be paying this off over time. The next one is the offer in compromise, and this is the one that everybody wants. Everybody wants, I owe $30,000 and I've got $3,000 in the bank. Can't we just negotiate with the IRS? $3,000 is better than nothing because I can't pay $30,000. Let's just write a check for $3,000 and they should be reasonable people. They should accept the $3,000. Well, it doesn't work that way. Again, there's a formula. They're not only going to take into account your monthly income and allowable expenses, they're going to take into account your assets. Your assets not only include equity in your house. Maybe you own a $300,000 house. There's $200,000 left on the liability. You have $100,000 of equity. Now, the IRS is actually going to cut you a break there because they're going to use kind of a quick sale value on your house. So they're going to take 80% of the market value, not 100%. So let's say, I'm not going to do that math in my head, but let's say that 80% of your market value is not, X, it's 250. Well, they're going to take that 250 minus the 200 that you owe, and so you have $50,000 of equity in your house. They're also going to look at your IRA accounts. I know you say, I can't get to my IRA. I'm not retired. There's a penalty for me taking out money from my IRA. That's true. The IRS doesn't care. They're going to look at your IRA balance and say, that money is available to pay your taxes. You can take the money out, you can pay the penalty, you can pay the tax on it, and you need to pay it to us because you owe us taxes. Now, unfortunately, the problem is you owe these taxes. Now, if for some reason you disagree with the IRS's assessment that you owe the taxes and there's a reasonable basis based on tax code for an argument against why you owe these taxes, that's a completely different issue. We're talking about taxes that there's really no way out of. We owe the taxes. We agree with the IRS that they're owed. We simply can't pay them. They're going to look at all your assets. They're going to look at equity in your vehicles. And you say, sell your vehicle and pay the tax. You owe this tax. They're going to get it. They can levy your wages. They can levy your bank accounts. They can go in and take money from your bank account to pay these taxes. They can go into your IRA and take money. Now, they're going to come to you and tell you to figure out how to pay it before they start doing these things. But eventually, they can and may do these things depending on the balance that you owe. They can also send a letter to your employer. They can levy your wages. They can send a letter to your employer that your employer is bound by law to take the amount of money they say. If the IRS says, we want $300 a month from their paycheck, your employer has to send that directly to the government. It's called wage garnishments, and they can do that. We want to avoid these things. Getting on a payment plan can avoid these things. It's possible, let's get back to that offer in compromise. It is possible you qualify for an offer in compromise. The offer in compromise is a great thing. The IRS is in no way ever bound to accept an offer in compromise. It's basically the mercy of the IRS agency and the U.S. government to accept less than the taxes you owe. Now, there are ways where we can pretty much not guarantee, we certainly can't guarantee, but we can have a high likelihood of this offer being accepted. And basically, we just have to go through the calculation similar to what I mentioned earlier. We have to take your wages, we have to take allowable expenses, which could be less than your actual expenses. We have to multiply that out times the remaining time that the IRS has left. We have to add in any assets that you have, such as your IRA and vehicle equity and equity in your home. And we have to come up with what is an acceptable offer. Now, people may tell you, hey, you see these national advertisements all the time. We take $200,000 of IRS debt and we knock it down. We pay $500 and it's gone. But it's not that easy, and you have to actually qualify. Now, if you qualify, that is possible. You can take $200,000 and only pay $500 in tax. The IRS will accept that offer. But in order to accept that offer, you basically have to only have $500 of assets to your name. Barely any income, because if you have income, they're going to collect that income over the next couple of years because they're going to get more than $500. They're basically evaluating your ability to pay the same way a bank would when they're going to loan you money for a car or a house. They're evaluating your ability to pay. And if you're offering less than you can actually pay, they will not accept that offer. You have to offer what you actually can pay. But if you're in a position where, based on those calculations, you truly can't pay the full tax, an offer in compromise is a possibility for you. Now, I know there's a lot of information there. The best thing that I can say do is to seek professional help, to be honest with you. Enrolled agents, EAs, tax attorneys, and CPAs can represent you before the IRS. Other people who are not licensed as one of those three things can help you with certain aspects of these, but those three types of professionals can actually talk to the IRS on your behalf, get a power of attorney, and negotiate with the IRS for you and help you out tremendously. Should you go to one of these national firms that are running advertisements? I personally, it's an opinion, but I don't think you should. I don't think that there's anything that they have any ability to get a different type of offer and compromise accepted. They don't have any type of proprietary information that I know of that I could even foresee them having that would help. This is a collections process that is spelled out in the Internal Revenue Manual that you can read yourself, and it's basically a process that you follow. So there's nothing that they can do. Yeah, they do it all the time. That's great. They're used to it. They know what they can do. But a lot of times it seems like they're taking large amounts of upfront payments before they even know if they can help you. Now, most CPAs, EAs, lawyers, myself included, will charge a consultation fee. You're not going to get a free consultation because the consultation is going to lay out a lot of what I just said, but specific to your situation. There's going to be an evaluation of what do you owe, what do you have, what are our options. That's what you should get out of the consultation. You should walk out of that consultation knowing this is the path forward for you. That consultation is going to cost you probably somewhere between $300 and $700, depending on the professional that you go to. That is going to be well worth it because, like I said, you're going to know what you owe, what you can pay according to the IRS, and what your options are moving forward. Now, in order to prepare an installment agreement for you or to prepare an offer and compromise for you, depending on whether it's a streamlined payment plan installment agreement or it's an offer and compromise where you have to fill out a pretty in-depth application. The fees for these things could run anywhere from $750 up to $5,000 for an offer and compromise. So there's going to be a cost there, but at least with that local professional, you want someone who's going to sit down and evaluate your situation for a consultation fee, but they're not going to say, yeah, send us $5,000. We can guarantee we'll get you out of your taxes. They can't guarantee that because they haven't seen your tax situation. And it's possible that the IRS is going to deem that you can pay the full amount. So don't go to anyone who's going to take thousands up front before they've evaluated your situation. Now, they're all going to take the money up front before they submit the offer and compromise because they can't guarantee even at that point it will be accepted. So you're going to have to pay for it, but at least you have a good chance of it being accepted because your situation has been evaluated. Don't go to anyone who promises that they can, remove your penalties or settle your debt for less without evaluating your situation. They need to evaluate that before they can make those promises. So that's kind of the basic there. This video might have gone a little bit longer than I hoped, but again, this is a very complex issue. You definitely need to most likely seek professional help with someone who's familiar with the process. I didn't mention who I was at the beginning of the video. My name is Brad. I'm with Fluent CPA. I create these videos with the hope of bringing peace to your tax and finance responsibilities. Don't forget to subscribe to my YouTube channel, hit the bell so you get notified when new videos post. I will be bringing more related to IRS tax debt, tax problems, and IRS representation in this category. So look for those in the future, and thanks for watching.